This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Lisette Tellez of Ocean Azu Partners. Lisette, thank you for joining us.
Thank you for having me.
Can you tell us how you got into early stage investing?
Yes. So I actually, during college, was part of a student-run venture fund that invested in student startups. So I spent 2 years with the fund called Dorm Room Fund, which is backed by first round capital. And it was super exciting. Essentially, we would invest in approximately 12 student-run companies per year. And then the second year of being with the team, I was co-leading the team. So it was just a really great experience to get an early look into early stage investing.
So now you work with Ocean Azu Partners. Can you tell us more about that group?
Yes, absolutely. So I joined Ocean Azu upon graduating. I loved doing Dorm Room Fund. It was such a great experience. And when I was getting close to finishing school, I was sort of left with two different paths. I studied computer science. And so one option would be to go work for some technology company, of which there are many awesome ones. But I was really excited about early stage investing. And what I was really hoping to find was an opportunity to continue to go down that path and keep learning what I was learning. And during school, I always thought that I would join a startup because I love that startups just have this incredible power to really change the world. And so I was like, I'm going to find a startup and it's going to be great and this will all work out. And towards the end of my schooling, I still hadn't found the right idea or the right team to work with. And I realized that I was really trying to force it too much. And so I sort of let go of that and decided that later down the line, when I have expertise in a certain area, maybe I'll be able to find a problem that's worth solving and I'll go after that. So in the meantime, I thought of looking to join a fund because it's a great opportunity to learn about a lot of different industries and still have an impact on startups. And then when I came across Ocean Azu, I really felt like it was the perfect opportunity because Ocean Azu is a relatively new fund. So in many ways, it's still in the startup stage since we're still shaping a lot of what the fund looks like. And we've come such a long way since it's gotten started, but it's a really perfect blend of the two worlds because it's both a startup mentality and also a fund that's looking at a lot of different industries and a really great learning experience.
So who is that fund for? What's a good criteria for a startup to come to the fund, and what's someone that shouldn't be coming to it?
Yeah, absolutely. So we look at 4 key areas. So it's team, product, market, and then what we call our investment fit. So starting at the end and then working back to the front, our investment fit is seed and Series A companies with some traction, and we're looking for the right amount of funding combined with the right valuation. So we won't invest more than 10% of our fund in one company. So we're looking for a company that's raising the right amount where we can still have enough of an impact, but it's something that's within our investment range. So we typically invest in the first round between $100K and $1 million. And then on top of that, we're looking for some viable path to a 10x return on our investment. So looking at an early enough stage where we could support the company in follow-on rounds and eventually see the path to that exit. So that's the investment fit. And then the next piece is the market. So we're looking for companies solving a really significant problem where there's a validated need for the solution in the market and a clear willingness of customers to pay for the solution. And then in terms of product, we're looking for a completed MVP. So we look for technology companies, completed MVP with some metrics or feedback. Maybe it's early pilots, early customers, and then clear differentiation and some defensibility. And then obviously the team is extremely important to us. So we're looking for people we trust. That could be we build a relationship with the founders over a long period of time. Oftentimes it's we already know the founder through our networks, or we know someone who knows the founder and we're able to make that connection that way. And then we also look for entrepreneurs who want our help. So we don't want to just be a check. We also want to be able to provide value beyond that. And if it's a company where really amazed by what they're building, but we see that we can provide absolutely no value, we won't invest, because to us, it's not a good investment fit for either us or the founders. So that's our general overview.
Do you invest across the U.S. or in geographic areas?
Yeah, so geographically, we don't have any requirements, except we have a requirement that the company must be either already selling in the U.S. or have some sort of strategy for selling in the U.S. But we look at companies from all over the world, including Israel, Canada, etc.
And do you have any example companies that you can point to that were really good fits?
Yeah. Let's see. I mean, I would hope to say that all of the ones that we've invested in are really good fits for us. So we've looked at a lot of companies out of Israel, and those have all been really interesting. And investing in other countries obviously has its own challenges, but there's just so much incredible technology coming out of there. And something that those companies have in common is being very innovative in the technology itself. So there are a lot of companies that we're seeing coming out, which are still probably going to be great companies, but it's not a good fit for us because it's more of a service company with an app. We're looking more for companies that are being really innovative in the technology itself. And we're seeing a lot of that in Israel, including agriculture technology, biotech, et cetera. So that's been awesome. And then in terms of the US, we look at a lot of companies out of Boston, South Florida, just the East Coast in general, and then obviously some companies out of Texas, California, and so on, kind of the innovation hubs. And all of them have certain things in common, including having some strong moat or defensibility, which we really like to see, especially with some certain incumbents in the space that are really strong. Just being able to have a really solid moat can take a company a really long way.
And what is one of your favorite companies that you've invested in and why?
Yeah, so this is a great question. And I like answering this question because to me, it always goes back to the founders. So I've been with Ocean Azu for not as long as the fund has been around, but one of my favorite companies is one that we brought on recently called Hyper. And the founder is just someone who I think is a very exemplary founder. It's someone who, to me, really expresses who I would want to be as a founder. He's just extremely responsive to feedback, very hardworking, very focused, all about setting goals and then doing whatever it takes to meet them and so on. And I think he's done a really good job building the company. I actually first was exposed to the company a couple years ago when I worked at the accelerator that it came out of. And even at that time, I was thinking to myself, wow, he's really onto something. He's really doing a great job with this. And then it's great because 2 years later, we happened to reconnect with that accelerator that it came out of and with the company. And sure enough, they were raising funding. And it was a great opportunity for us to invest and now play a role in their future growth. So I'm really excited about that one.
And you mentioned agriculture as a sector. What are you seeing in that sector as far as innovation?
Yeah, agriculture is a really interesting one, right? Because there's such a demand for more food being produced for the greater and greater population that we're having. But there's also a shift towards healthier and healthier food consumption. So there's challenges in terms of more production of produce. How do you find the space? And we have issues of soil not being able to generate the same food that it used to generate because of overuse and because of chemicals and things like that. So there's a lot of different technologies, a lot of them using some sort of machine learning to help optimize either what seeds are being grown or what chemicals are being used to treat them, or coming up with new types of chemicals that are going to be less harmful and things like that. I know there's drone technology that's being used to survey land, to test for or to find plants that may be being destroyed by some sort of pest, et cetera. So it's interesting because all these new technologies that are popping up and being talked about more and more are also being applied to the agriculture space, which may not be the sexiest industry, but there's obviously tons of need there. And so it's going to be really interesting to see how that area continues to flourish.
And what are some other sectors you see that are coming up that you find interesting?
Yeah, so for us, I mean, we look at a lot of fintech, a lot of digital health, biotech again, med tech, et cetera. digital marketing. I think for us, it's less so about specific industries and more so about how founders are using new technology to solve problems creatively. For me in particular, so my background's in computer science, but I'm also a health coach, and I've focused a lot on the digital health side of things. And that area to me is incredible because it's so broad and expansive, and there's so much being done there, from VR to train doctors to all of these wearable technologies to AI to help people optimize how much they're exercising and what they're eating and so on and so forth. And I think what's interesting is that I'm seeing a lot of preventative health companies try to pop up. And for any founders who are listening to this, I would love to challenge people. I've seen that an issue with doing a preventative health type company where their focus, for example, is on helping people eat better or improve their nutrition or their exercise in order to avoid a disease. There's a lot of those companies trying to pop up versus the treatment side of things or reducing hospital costs and things like that. There's a ton of those companies and they're all doing really well. The preventative care ones are struggling a bit more because there's this issue of people not really being willing to pay for something until there's a problem, right? So if I'm seemingly healthy and I'm doing great, I don't really want to pay for something that's going to theoretically prevent me from getting ill because I don't really see the problem. So they're having a tougher time getting sort of a willingness to pay from customers. And I would love to challenge founders to figure out a way around that. I was recently joking with a friend of mine that I'll just start a company that it's a VR company that's going to show you what you're going to look like in 10 years, 20 years, 30 years, based on what you're eating and how much you're exercising, just to scare people and bring awareness. And then maybe all of these preventative type companies will start to do better. So that's an area that I think is really interesting.
What about going to the insurance companies and having them provide rebates, discounts to those who take the service versus those who don't? That way it's more of an incentive than it is a punishment.
Yeah, absolutely. That's the typical pitch that you see, right, from founders, is that they're going to go to insurance companies and have them reduce premiums. And for some founders that works, and for some companies, the tricky part is collecting the data that proves that it's going to make a difference, which takes time, takes money. And then with all of these different companies going to insurance companies all at the same time, they can only look at so many. They can only say yes to so many, even if all of them would help. So that's definitely a path, and that's probably the most popular path, at least that I've seen. And while it works in some cases, it's definitely a tough roadblock for a lot of founders to overcome, especially those that don't have access to a ton of funding. So it'll be interesting to see how that goes. And maybe insurance companies will start to become more open to that kind of technology coming about and will change how they look at it, which would be incredible too if there was some way to lower that barrier.
How much do you think value-based healthcare, or what some call population-based healthcare, will really start to drive that in a bigger way? That's when they give a carrier a certain amount of money and they have to take care of everybody, and then they're going to the doctors and the people saying, I'm only going to reimburse you if you get better, not just because I did a test, especially for doctors. And so it seems like the market's shifting to positive outcomes. And so if your preventative solution is considered a part of that, it seems like that might incentivize people more. Do you think that would be in effect?
Yeah, absolutely. I think that the more the industry shifts in that direction, the better. And I think it's a gradual thing, right? Like I don't expect to wake up tomorrow and then all of a sudden it'll have changed. But I think as long as people continue to push for it and show the value in it, it'll continue to shift.
What do you see in the direction of corporate wellness programs? At one point, that seemed to be a focus point, but I don't know if it still is. What's your take?
I still see a lot of pitches that pertain to corporate wellness, so I think it's still a trend. So I totally understand going the B2B route because of, right, obviously it's like you get access to hundreds or thousands of employees with one sale rather than going direct to consumer. And I think that's a great approach. And then obviously it might be easier to work with insurance companies in that approach as well. The tricky part is just selling into the company doesn't ensure that the company itself is going to incentivize its employees to really adopt whatever product you're selling. And if for whatever reason that company decides to look at their month-to-month budget and wants to cut a couple of bucks here and there, if they're not seeing direct value out of your service, you may be one of the ones that get cut. So I think just encouraging that adoption, there's that last step, right? And that's tough. And that means that your UI UX has to be outstanding and easy to use and fun and very quick to be adopted within the company. Right? So I think the more that founders can focus on that, the better. And I've seen that a lot, right? A lot of these digital health type companies are very UI UX focused, which obviously makes a ton of sense.
What about blockchain? Have you seen much in that direction, and what's your take on it?
Yeah, I have. It's everywhere, right? Blockchain technology is really interesting. I mean, the whole crypto spaces as well. I think that space is still very much evolving, and I personally wouldn't go out and start investing in ICOs or anything like that. I think it's still highly speculative. There are so many, I've heard this from so many people and I've seen it myself. There are so many unfortunate scams out there in terms of tokens or blockchain technologies that are alleging to do one thing or another. And really there's no technology behind it. It just sounds really cool. And that's super unfortunate. And I've heard numbers as high as 90% of scams of the ICOs or anything at one point being scams. And I don't know if that number is true and I have no idea how they came up with that number, but it gives you an idea of how much out there is still very, very risky. I think that there's so much power in the technology, obviously, and it's a great thing and could continue to be a great thing. But in terms of as an early stage investor, that's something that unless I know the founders extremely well and have already built a trust, if I got a cold email about a blockchain technology or another token or an ICO, that's not something that I would jump for joy at right away.
So in which area, fintech or healthcare or other, you think blockchain will have the most immediate impact?
So I think that's hard to say. One thing to think about with blockchain technology is that where it's going to be adopted is where people most understand and trust it, right? So to me, a blockchain technology that's focused on creating the next Airbnb, but the blockchain version where it's decentralized and you're paying with a token, that's targeting the day-to-day people who, I mean, me personally, I wouldn't use that service because the trust level I don't think is there yet and the commonality isn't quite there. But if you're creating something where, say, it's something for like an app developer to use or something where someone who's already excited about the technology, knows a lot about it, and is able to tell when it's something that is going to be truly helpful and is trustworthy, those are the kinds of people who are more likely to use it first. So I don't know that I could point to an industry and say that that's where it's going to have the greatest impact, but I think that when these blockchain technology companies are focused on the right kinds of people, that's where they're going to see early success.
Well, I see blockchain come up in many, many different industries. I always wonder about fintech and healthcare. While they're big, they're also highly regulated, and regulation takes time to change, although I think it will. Supply chain seems like an area where I see people jumping up and down wanting the solution, and there's really not much regulation in that. It's just their choice to put that in. And some of the early applications I've seen that actually got up and running were supply chain, where everything in a system is now in one immutable ledger that you can search and review and understand. So it could be one of those places, or it could be in another one as well. Long-term, fintech and healthcare are much bigger, of course, and be interesting to see what they come up with then. In the last couple of minutes we have here, what else should we cover?
So I guess just going back a little bit to Ocean Azul and some of the questions you asked earlier, I think something that's been really exciting about early stage investing is that you're working with really incredible people, right? And it's the kinds of people who are willing to risk anything to solve a problem are some of the, to me, most interesting and courageous people that I know. And so I think the best part about this is just working with the founders. And something that I think that I love that we do and that I would encourage founders to look for is that we're really focused on adding value and also thinking of an investment as a partnership. And so the more that founders can find strategic partners or people who are really going to support them through different problems, the better, right? And you don't want to find just a check or just more money. It's really about finding people who are going to be a partner with you in the long run, especially when you're thinking about early stage investors. And for us, something that we talk about a lot is that we're looking for founders who are changing their world, with that very important distinction, right? It's not changing the world, it's changing their world. And so they don't need to go out and find some problem that's extremely pressing or trying to solve cancer or something like that. If they can find a problem in their world that they're an expertise in, whether it's cross-border logistics or something like that that's very specific, the better, because they're the ones who are best positioned to solve that. And then if they can go out and find the right partners and the right investors to help them grow, they're going to see a lot of success. And it doesn't have to be the next Facebook or the next Google. And again, it doesn't have to be solving cancer or anything like that. They'll be really successful if they focus on changing their world. And that's something that we consistently are looking for.
Well, that sounds great. So how best for the audience to get back in touch with you?
Yeah. So my email is lisette@oceanazulpartners.com. LinkedIn is great as well, any of those.
Well, we'll put those in the show notes. Appreciate your taking time to share this information with us today and hope to have you back for a follow-up.
Awesome. Thank you so much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.